Good morning, ladies and gentlemen, and welcome to the Coffee with Craig show. We'll be talking about commercial real estate in Central and Eastern Europe. So good afternoon, ladies and gentlemen, and welcome to the Coffee with Craig show. We're here one day before MAPIC at our pre-MAPIC lunch, and I'm here with Paul Cawood from Sierra Balmainn, group director and leasing, in charge of leasing. Is that correct?
Yep, pretty much.
Right. So, Paul, thank you for joining us here on the Coffee with
My
Craig
pleasure.
show, and good to see you here in MAPIC. So, first of all, tell us a little bit about yourself.
I'll keep it short.
Okay.
I was involved in starting Balmainn Asset Management with James Turner back in, oh my goodness me, 2003-4. And we built a business in Poland, based in Warsaw, running shopping centers across Poland, as we now do. And we look after the asset management, the property management, the leasing, the marketing, everything you can think of in most of the centers. And some of them we do management and leasing, and others just leasing. So a whole combination. So we like to think we know a little bit about retail and shopping centers, and also how to sustain them and improve them, and not least over the last 2.5 years as things have got a little more difficult one way and another.
Well, that's another thing. Tell us about how 2022 has been, 2021. What are some of the, let's say, interesting things of the last, because I haven't seen you for at least 2 years. What are some of the interesting things over the last 2 years? And really, how has the last 6 months gone as well?
Yeah, I mean, just going back a little further, 2020 was obviously a massive workload trying to sustain the shopping centers and also our partners, the retailers. And I'd like to think that our partners, the retailers, know that we treat them as partners and work with them on very much a level playing field, and trying to help them sustain their businesses over probably about 1.5 years from early lockdown times. Since then, life has been perhaps more on the front foot than defensive as it was over that period. We've managed happily to pick up 5 new mandates on shopping centres around Poland, which is wonderful. And I'm hoping that our reputation perhaps has sort of gone forward partly as to what we did over the course of 20 and 21. We're seeing an awful lot of activity from the discount and value retailers, both in general homewares and in fashion and clothing. They are coming in and providing a great market for mini anchors within the centres, sometimes taking over vacancies, sometimes we're putting units together to create enough space for them. And all of those guys are trading really, really well. And so there's a lot of business going on with people like Pepco, Deals, Action, Sinsay, all of whom operate in that value end of the market. We're still managing to do quite a lot of deals with inline shops. That's far more difficult, and smaller spaces, or 75 meters up to sort of 350, is much more difficult. So often those sort of stores will get combined to provide bigger space, or we're doing pop-ups, anything we can do to keep the lights on.
Well, the 75 square meter were always tough, weren't they?
Yeah, I mean, that was always a little bit of a dead area. If you're sort of below 50, you could usually find somebody to fill that. And often those are within the service lines anyway, backed up by the supermarkets or hypermarkets. Now the dynamics are a little bit different. A number of retailers have slowed down their acquisition program because of the war in Ukraine. We're still talking to most of them, but it's a lot slower.
So they're just worried about what's going to happen with the war and how's that going to, act for quiet.
Sure. It's just a little bit more caution. And of course, now with inflation and energy costs, perhaps in particular, going up, things are a little tighter. So there are a number of conversations going on with all of these partners to see how we can help. And we are talking to other managers and other owners around Poland as to what the general view is and how we deal with things like lighting and heating during the important Christmas period coming up, because obviously things get a lot colder. There are some, I think, fairly simple solutions to that. And I think we also have to remember that most shopping centres are not tourist destinations. So our customers actually know where the retailers are. And it's not necessarily all the time to have every light on all day.
Right.
In the case of some, maybe some specialist offers, maybe in the leisure sector, if they're not able to make money at certain times of the day, then why open? Because they're not operating as an anchor for all the other tenants and us as owners and asset managers.
So if they're not making money, but it's really costing them a lot in electricity and to bills,
So then you have to make sure you have a quorum of occupiers open. And obviously within Polish leases, there are keep open clauses, which means that they are legally obliged to open. I think there is give and take on both sides here. And we are in conversations with our partners all the time right now to look at how we can sustain margins as much as we can for everybody. And obviously that includes us and our investor clients, as well as the retailers. It is another balance. And we all managed to get through the COVID period. We did probably 1,000 tenant support agreements with our partners over that period. And it's important that we then, now embark on a different way of helping to support everybody. But obviously our investors do need to earn income. The shopping centres need to earn income, as well as the retailers need to manage their costs. So it's another balance to be created. And the cooperation that we generally find with most of our partners is very strong. So
right. Well, of course, if the investors aren't making money, there's no shopping center for the retailers as well, right?
Oh yeah.
I'm sure you've never told them that, but probably were thinking that at the time.
I mean, happily in Poland, there have been very few closures. In parts of the rest of the world, as we all know, there have been a number of closures of shopping centres, and there will be a lot of changes. And this is now a long conversation, or a conversation's been going a long time about how we deal with the future. And in fact, the theme of MAPIC this year is far more leisure and food and beverage in its approach. And no surprise, that's something we've been working on for a very long time, pre-pandemic. But it is very important to provide more of a one-stop destination. And you can very interestingly anchor retail with additional leisure, big and small. And we're working on.
Yeah, I mean, I've talked to some of the bigger guys, the big shopping centers, and they have the money to put in the cool big leisure.
We are drinking rosé.
Oh, right, a little bit of rosé. Yeah, exactly.
Very nice to see.
We already had our coffee. Yeah. So talking to some of the big players and big shopping centers, and they're going to put in some big leisure opportunities. Now, I know a lot of your shopping centers, I've been in a lot of them, and they're more medium-sized, let's say smaller. So what kind of leisure things do you look at? Like, hey, this is what we can really afford to do, and this is what our clients can afford to pay for.
Yeah, good question. In some of them that are very convenience related, working within smaller catchments, either within small cities or within suburban areas of big cities, there's less need for big leisure. But putting in where we don't have them already, the potential of health and fitness is a great addition.
So just fitness club they can
so gyms. I mean, many of our centres already have them. There isn't necessarily a direct correlation between spend coming straight off a gym visit, but it creates a mindset of somewhere you can go for a little bit of everything.
Right. Well, they're going in there, they're parking, they're doing something at the mall.
The key is get people in there, because actually most people do spend additional money when they make a visit to a shopping centre. So it all helps. In some of the bigger locations, there are opportunities for leisure. And we have one centre, EuropaCentralna, in
very big,
in Silesia. And we have a number of smaller leisure operations in there that are doing really well. And it's become a bit of a destination. So we're working, for example, there on attracting some bigger leisure operators into that location.
And how do you see, we're about a minute left, how do you see 2023 and going forward in 2023? I mean, there's, what don't we have? We have inflation, we have this, we have that, we have all these kind of, the war to worry about, the economy to worry about, the imminent collapse, what everyone's always talking about happening. What do you do to put them all forward, making sure we're going to be here 2024 talking about the successes of 2023?
I think 23 is going to be quite challenging. Our view is that inflation will peak sometime next year, probably early next year. And obviously that's having a big impact. Everywhere in the world, everybody stops and looks at Christmas. And in January, we'll be sifting through the numbers. Happening in Poland, as you well know, we see that the turnover and the sales of pretty much all of our retailers in the centre. So we can analyse and manage on the back of that. And that's the advantage it gives us, is that knowledge, not necessarily the income, the knowledge.
And January is always quiet anyway.
So we will be navel gazing then, like the rest of the world, on what retail has done. But going forward, much of it would be more of the same. And the retailers who want to and need to expand and are doing well will continue to do so. We will continue to work with them on new deals.
Right.
We'll be upsizing, downsizing, relocating, bringing in new people. I mean, we've got a very high occupancy rate within our centers generally, fortunately. And most of our portfolio, as you alluded to, is based on convenience plus. So we have fashion, but we have a lot of discounted value as well. In homewares and fashion and all the other sectors. But I think it's going to be tight. I think capital markets will continue to be tight.
Right.
There is still a differential between vendors' aspirations and buyers' aspirations in terms of pricing. And right now, with all the other economic challenges that have slowed down as far as the retail market is concerned. I think more of the same. I think we will be talking to retailers a lot about trying to get the right balance on energy costs and looking at how everybody is managing to survive with the inflation. But going forward, from our point of view, we are working on some hopefully new projects from our point of view in terms of mandates coming in, which is great because we need to keep feeding the business.
Sure, of course.
Like everybody else. But yeah, it is a time of uncertainty. But I think the levels of management of that uncertainty are, famous last words, perhaps more logical than we were able to see in April 2020, for example. I think that we're dealing with economics here rather than the massive unknowns. Of
actual health issues.
Yeah, they're challenging times for all of us. But I think with some creativity, with some strong partnerships and cooperation, there's a way forward, and all of our centers are capable and are trading to a level which is satisfactory. Not everybody's going to do that every day.
Sure. And we are here at MAPIC, so a quick MAPIC question for you. If you could come out of here with, let's say, 3 reasonable new contacts with retailers, what kind of retailers are you, not saying you have to mention any names, but what kind of retailers or what kind of companies that are, it could even be, tech companies that you're looking for that could be interesting for income producing for your malls?
Interesting. I am not, having looked at the list of delegates, expecting to meet many, if any, new retailers to come into the Polish market from our point of view. The majority of newcomers to the Polish market tend to be, we're going to go to Warsaw first. They're quite high-level retailers that may only take a relatively small number around the obvious cities. I think in our situation, the newer retailers who come in are going to come to our centers eventually, and we're talking to them. I think it's more to do with leisure operators for a few specific ideas that we have.
And I saw there was like Leisure Day tomorrow. Yes.
Yeah, absolutely. And there's a big exhibition and a number of stands of leisure operators, some of whom I've already been able to target through London and the States as well. But I'll be picking up on a number of those. And yes, I've got a number of meetings with newcomers who are properly international. So where they see a market, they will go.
So leisure's the key then.
Leisure is a big target, but I'm also seeing a lot of our great friends and retailers. And there aren't as many here as the last time I was here in 2019 by a long way. But there are absolutely enough for us to fill our time and progress deals and talk about new deals with them.
There was a few less on the plane too coming over, I'll tell you. There was a lot less retailers for sure, as we know, a few of them.
Understood.
Well, Paul, great. It's great to see you. Thank you for your time. And
nice to see you actually on the beach.
Yeah. It's up a little bit. We'll be out there later. So thank you all for watching the Coffee with Craig show this today. Rosé with Craig, with Rosé with Craig and Paul. And we had a great lunch a bit earlier. Thank you all for joining, and stay tuned. We'll be doing interviews all this week here in Cannes. Click here to subscribe to the Coffee with Craig show, and don't forget to share it with your friends.